Welcome to Audit Snapshots. I'm Christine, and in this playlist, we'll simplify each phase of the audit process with clear concept maps. Whether you're brushing up on your knowledge or gearing up for that big exam, you'll find something useful here for sure. If, however, you desire a more detailed approach a la undergrad classroom discussion, feel free to check out the related playlists in my YouTube channel, Let's Talk Audit and Assurance. So, what are we waiting for? Let's dive in and give our audit knowledge database that much needed boost. And where else do we start but from the very beginning? Ladies and gentlemen, this is the introduction to assurance engagements, the snapshot version. Now, we all know that when we talk about assurance, it is not a certification, it is not a guarantee, it is not even a promise. In the world of assurance engagements, the word assurance simply means satisfaction. In fact, assurance is a satisfaction of a practitioner with regards the reliability of an assertion being made by another. Two very important terms we need to pick up from that, and that is satisfaction and reliability. Looking into the definition of assurance engagements coming from the Philippine Framework for Assurance Engagements, an assurance engagement means an engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users other than the responsible party about the outcome of the evaluation or measurement of a subject matter against criteria. Well, friends, that is quite a mouthful. So, in order for us to appreciate better the definition of assurance engagements, what better way than to simply call out the elements of an assurance engagement? And you guessed it right, there are five elements to an assurance engagement. Starting with number one, we get to talk about assurance engagements always have a three-party relationship. And this three-party relationship involves the responsible party, who is the party who may be responsible for the subject matter or the subject matter information, or may be responsible for both. Now, the responsible party may also be an intended user, but not the only one. Because if the responsible party and the intended user are one and the same person, then there won't be much of a three-party relationship, right? So therefore, the responsible party should not be the only intended user. Just we'll talk about the subject matter and subject matter information in element number two. At this point, we draw our attention to the intended user, and the intended user is basically the audience of the story being told by the responsible party, and the intended user may or may not be the engaging party. In other words, it's possible for the intended user to be contracting the services of the practitioner, but may not always be the case. And speaking of the practitioner, because we are talking about assurance engagements, we are reminded that the practitioner is broader than the term auditor. After all, an audit is just one of the many types of engagements under the umbrella of assurance engagements. The second element is an appropriate subject matter. When we talk about the subject matter, it's not just any subject matter. It has to be an appropriate subject matter. So, how do we know that the subject matter is appropriate? Well, you have three tests. Basically, I call this one the litmus test of subject matters. Well, first, they have to be identifiable, they have to be measurable against a criteria, and they have to be capable of being tested, or they have to be capable of evidence gathering procedures. And so, therefore, a subject matter is appropriate if they are identifiable, measurable, and testable. Let's now go to what is the difference between a subject matter and a subject matter information. A while back, we mentioned that the responsible party may be responsible for the subject matter or the subject matter information, or in some instances, both. So, when we talk about the subject matter, it refers to the nature of the assertion. In accounting, we can think of this as the substance. When we talk about the subject matter information, this is the outcome of the evaluation or the measurement of the subject matter. Essentially, this is the document that contains the outcome or the result of the evaluation. You may think of this as the form. In order to further the difference, the illustration of the difference between the two, let's pull out this example coming from the Philippine Framework for Assurance Engagements. And let's draw our attention, for example, to financial performance or conditions, as this is what will be closest to our hearts for the entirety of our auditing theory journey. Now, when you talk about the subject matter, you're talking about the historical or prospective financial position, financial performance, and cash flows. That's the subject matter. Now, the moment that you evaluate, the moment that you measure the performance, position, and cash flow management, what do we have? We have the financial statements. And so, therefore, when you talk about the financial statements, that is the subject matter information. It contains the result of measuring the subject matter. If the subject matter is financial position, the subject matter information will be the balance sheet. If the subject matter is financial performance, the subject matter information will be the income statement. And if the subject matter is how the entity manages the cash flow, the subject matter information is your statement of cash flows. We also have to point out that the subject matter and the subject matter information of an assurance engagement does not need to be limited to financial performance or conditions. As you can see, this can even refer to non-financial performance or conditions. It can even talk about physical characteristics or systems and processes or even behaviors such as that relating to corporate governance. But going back to our example of financial performance or condition, let's think about who is responsible for the subject matter. Who is responsible for the financial position, financial performance, and cash flows of the entity? I think you will all agree with me when I say, well, it's management. Now, who is responsible for the preparation of the financial statements, which contain the results of the evaluation of financial position, performance, and cash flows? And in a sing-song voice, we all together say, still management. So in this case, we get to see an example of a responsible party that is responsible for both the subject matter or the subject matter and the subject matter information. So that is our second element. Let's now move on to the third element. And the third element talks about suitable criteria. And again, we ask the question, how do we know that the criteria is suitable? Well, we go by its characteristics of run CR. So hopefully there will be no need for you to run CR. But this is the mnemonic we use to remember the characteristics of a suitable criteria. The first R, well, actually either of the two R's, would be reliability. Letter U would stand for understandability. Letter N is for neutrality. Letter C is for completeness. And the other R will, of course, be relevance. Now, when we talk about criteria, criteria actually refer to the benchmarks, or we can think of them as the standards with which we compare the subject matter and subject matter information with. Criteria may be formal and less formal. Formal criteria is more often associated with established criteria. Less formal criteria are those which we associate with specifically developed criteria. Now, just to give us an idea, when we talk about formal or established criteria, examples of this will be our laws, our standards, meaning to say they go through a process and they are generally applicable to, well, a majority or even the public. But when you talk about less formal or specifically developed, think about house rules. Think about KPIs, where these are generated specifically for use by a certain entity or a certain organization or a certain transaction. And so these are called less formal or specifically developed criteria. We also have to remember that in the case of assurance engagements, criteria must be communicated to the intended users so that the users will basically know with what the subject matter is being matched against. How do we communicate the criteria? Well, there are a variety of ways. Number one, it can be done publicly, such as, for example, if you think about our accounting and auditing standards, they are published in a website available for public consumption. They can also be communicated in the subject matter information or in the document. They can be communicated in the financial statements, for example, when management would point out in the notes to financial statements that the FS are prepared in accordance with the Philippine Financial Reporting Standards. It can also be communicated in the assurance report, such as when, for example, if you read the audit report, we say that in our opinion, the financial statements of blah, blah, blah are prepared in accordance with the Philippine Financial Reporting Standards. Lastly, it can be communicated by general understanding, or perhaps in our lingo, we call this one, well, common sense. Like, for example, I think everyone knows how many seconds there are to a minute and how many minutes there are to an hour, right? So, that is an example of a criteria that is being made known by general understanding. So, that's suitable criteria, our third element. And the fourth element is sufficient and appropriate evidence. This is perhaps one of the most lengthy elements to talk about. But we can do this, guys. There are five considerations that we make whenever we talk about sufficiency and appropriateness of evidence. Sufficiency, of course, will refer to the quantity, the volume. Is it sufficient? Is it enough? And appropriateness would refer to the quality. And when we talk about quality, it's actually a combination of relevance and reliability. At this point, we try to imagine, how do we know that something is relevant? How do we know that a piece of evidence that we have just gathered is relevant? Well, the long and short answer to it is relevant if it helps us meet our objective. And the very objective of an assurance engagement is to express a conclusion. So if that evidence leads us to our objective, then that evidence is relevant. And how do we know that evidence is reliable? Well, essentially, something is reliable if even if there are two or three independent people looking at the same piece of information, they will still arrive at the same conclusion, right? So no matter who computes, no matter who looks at it, they see the same thing. That's a good indicator that the evidence is reliable. But another way to look at reliability of evidence is to determine what is the source or who is the source. Where did you get that evidence from? And it is precisely in this context that we are able to come up with that which we call the hierarchy of evidence reliability, which personally I think is a product of common sense. Think about it this way: between an externally generated document and an internally generated document, which one would you say is more reliable? Externally generated, right? Between a document, both documents internally generated, between one produced from a system of strong internal controls and another produced from a system of weak internal controls, which one do you think is more reliable? Well, of course, the one that comes from strong internal controls, right? Or between a document or between an evidence that was obtained by the auditor directly versus that which he simply got from inference or from inquiry, I think you will agree with me. The one directly obtained is more reliable. Am I correct? Evidence in written versus verbal or oral form. Written would trump the verbal. Evidence coming from original source documents versus photocopies and facsimiles. Original would trump the copies, right? So this is what we call as the hierarchy of evidence reliability. We also have to remember that there is a relationship between quality and quantity. In that, the more qualified, okay, the better the quality of the evidence, the less quantity you will actually need, thereby showing us an inverse relationship. Another thing that will affect the extent of our audit effort, which is directly related to the evidence that we will be gathering, is the concept of materiality. And to this, we recall that materiality is inversely related with audit effort. We have to remember that the lower the amount of materiality the auditor has chosen, the stricter the auditor actually is, because materiality is our threshold, right? So therefore, if you set a low threshold, you're actually quite sensitive to the misstatements, and the stricter you become. Therefore, the lower the level of materiality, the more evidence you will endeavor to get or obtain. Another thing that will affect our evidence gathering, the extent of our evidence gathering, is assurance engagement risk. Now, assurance engagement risk is the risk that a practitioner gives an inappropriate conclusion on a subject matter that is actually materially misstated. And with this, we recall what is the assurance engagement risk model, and that is, of course, the risk of material misstatement multiplied by the acceptable level of detection risk. Now, don't worry, in our second snapshot, we'll talk more about this concept or this model. But for now, let us recall that the acceptable level of detection risk also has an inverse relationship with your audit effort and ergo the evidence that you will obtain. When you talk about acceptable level of detection risk, if you have set your acceptable level of detection risk to a low level, that means you are very strict. Similar to materiality, right? When acceptable level of deduction risk is set as at a low level, the auditor or the practitioner is strict. And because the practitioner is strict, the practitioner will endeavor to gather more and more evidence. Then we get to talk about cost benefit considerations. Of course, cost is an important consideration in evidence gathering. However, we are reminded that the mere cost or difficulty is not a valid basis for omitting a procedure, especially if there are no alternative procedures available. I must repeat this one. Cost is an important consideration, yes, but it cannot override the need to gather evidence. And lastly, of course, we talk about professional skepticism. Professional skepticism being, of course, the attitude of the auditor, I mean, the practitioner, to conduct the engagement with a questioning mind. We have to be alert for inconsistencies. We have to be alert to possible information risk, especially since we understand that the nature of evidence is persuasive rather than conclusive. We also have to understand that in terms of professional skepticism, practitioners and auditors later are not actually expected to authenticate documents. Okay, that's not within our scope of expertise. However, we have to be alert for possible inconsistencies. So that is our fourth element. The fifth element will, of course, be the presence of a written conclusion, a written assurance report. And there are two types of assurance engagements as to the level of assurance, which will eventually dictate the type of report being issued. We have what we call a reasonable assurance engagement and a limited assurance engagement. Just to give us a preview of the difference between these two, we will talk about a reasonable assurance engagement. This gives a reasonable or high level. Take note that when we talk about a high level of assurance, that still means reasonable. In assurance engagements, it is not possible to give absolute assurance. The highest level we can give is a reasonable level of assurance. The form of the conclusion for a reasonable assurance engagement is a positive conclusion, and a perfect example of this will be an audit. Now, there is also what we call a limited assurance engagement, and to a limited assurance engagement, you guessed it right, the level of assurance is limited or moderate, and the form of the opinion is negative. An example is a review. Let's now try to differentiate what is a positive form of conclusion and a negative form of conclusion. Well, let's give some examples so that we can jog our memories about what's the difference between the two. If I tell you, in my opinion, the financial statements present fairly in all material respects, etc., 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 positive or negative? That's definitely positive. What if I tell you, in my opinion, the financial statements do not present fairly the financial position, performance, and cash flow management of etc., etc., etc.? Positive or negative? Guys, that is still a positive conclusion. So, therefore, a positive conclusion, if you have noticed, is something that is communicated in a more direct manner with the intended users. Well, to get a better idea of what we mean, let's listen to how a negative conclusion would sound like. A negative conclusion would sound something like, nothing has come to my attention that will make me believe that the financial statements need revision. What have you noticed? The positive form is more direct. In my opinion, the financial statements are presented fairly or are not presented fairly. But in a limited assurance engagement, well, the practitioner tends to beat around the bush. Nothing has come to my attention that will make me believe, etc., etc. Right? So, therefore, we get to wonder, why is the practitioner in a positive conclusion more confident than a practitioner in a negative form of conclusion? In other words, why are auditors more confident than practitioners performing a review? The long and short answer of it is it lies in the scope of the procedures. You see, when one performs an audit, one is given unrestricted and unlimited array of procedures that one may wish to avail of. You want to do a cash count? Go ahead. A confirmation? Not a problem. Observation, inquiry, inspection? You can utilize any and all of those things in an audit. However, when one performs a review engagement, to a review engagement, the procedures are actually limited to inquiry and analytical procedures. So I guess at that point, you get to understand why an auditor is more confident than one performing a review. So that's the difference between a reasonable assurance engagement and a limited assurance engagement. At this point, if you get to see this slide, this one perfectly represents, I wouldn't say perfectly, but this one represents our concept map for the elements of an assurance engagement. But we shouldn't stop here. Let's take this a bit further into looking at, as what we have mentioned, there are types of assurance engagement as to the level of assurance, right? Let's now open up what are the other types of engagement or engagement, assurance engagement according to the nature of the engagement. So, of course, we could present it some other way, like in a more tabular way, but I've always wanted to present it via what I call the assurance aliens. We draw here the world or the universe of assurance engagements. So, there are two types of assurance engagements according to the nature. A while back, we presented the types of assurance engagement according to the level of assurance, this time according to the nature of the assurance engagement. And we have what we call an assertion based engagement and a direct reporting engagement. If you look at the standards, actually, it could be quite confusing as to what is the main difference between these two. But I'd like you to think about it this way: if the subject matter information, we're referring to the report, referring to the document, we're referring to the result of the measurement or the evaluation, if the subject matter information is readily available to the intended users with or without the practitioner, or even without the practitioner, then that engagement is an assertion based or an attestation engagement. However, if the subject matter information can only be made available to the intended users through the practitioner, then that is called a direct reporting engagement. In other words, in an assertion based engagement, you don't necessarily need the practitioner for the report to reach the hands of your intended users. But with direct reporting, you need the practitioner. Because in certain instances, in direct reporting, it can even be the practitioner who does the actual measurement of the subject matter. So, this is the type of assurance engagement according to nature. And assertion based engagement, by the way, is called attestation. This is more popular, especially in the Philippines. And in fact, the most famous assertion based engagement or attestation is an audit. Now, we also know that in the case of attestation or assertion based engagements, reviews would also fall under this one, as we have given audits and reviews as examples of reasonable and limited assurance engagement just a while back. Now, as we have here our assurance universe, which includes both assertion based and direct reporting, it is then easy for us to say that all audits are attestation engagements and all attestation engagements are assurance engagements. But not all assurance engagements are attestation, because we have what we call direct reporting engagements. Now, the work or the engagements that can be entered into by the practitioner are not limited to the assurance universe, because we also have what we call related services or non assurance engagements. These are engagements which do not meet all of the criteria for assurance engagements. For example, we talk about agreed upon procedures. Now, agreed upon procedures actually make use of audit procedures. The nature of the procedures performed are audit. However, in case of agreed upon procedures, the parties, the responsible party and the intended user have to agree, and the practitioner, of course, have to agree on what procedures need to be performed. And with this, the practitioner actually does not provide an assurance. There is no written assurance conclusion, there is no written assurance report. The report of the practitioner in the case of agreed upon procedures is simply a report of factual findings. And the practitioner will just leave the conclusion in the hands of the intended users. So, this is the reason why it cannot enter the assurance universe because it does not give any level of assurance. Similarly, with compilation, in the case of compilation, then what is used is accounting rather than auditing expertise. So if you think about transforming a very detailed trial balance into financial statements with the correct line items, transforming a very detailed, disaggregated, okay, form of information to a more, more concise format is an example of a compilation. Needless to say, tax return preparation, for as long as you do not express any conclusion in it, you're simply preparing the tax returns based on the records of the client. That's not an assurance engagement as you do not give any assurance. And of course, consultancy, whether it's tax consultancy, management consultancy, consultancy would basically have a two-party relationship. So just the practitioner and then the client. And so in this case, it is not an assurance engagement. But going back to an audit, we have seen here that a detail is popping out. Well, there are essentially three types of audits. There is what we call an FS audit. And of course, in an FS audit, what we are looking at, the subject matter would, of course, be the financial performance, condition, and cash flow management, or financial performance, position, and cash flow management of the entity. Our main criteria to be used here is to compare the financial statements with an applicable financial reporting framework in the Philippines. That's, of course, our PFRS. We also have what is called a compliance audit. Now, in the case of compliance audit, the auditor uses as a criteria laws, regulations, maybe provisions of a contract. Okay, so that is for compliance audit. And the third type of audit is, of course, operational audit, which we most often liken or associate with internal audit. So for operational audit, well, the main criteria would be the KPIs or the key performance indicators set by a company. May also be according to specifically developed criteria for that particular entity, looking into efficiency and effectiveness of operations. So there you have it, ladies and gentlemen, our concept map for the introduction to audit and assurance. And at this point, I'd like to congratulate all of you for doing such a good job of staying with me in this snapshot. And I wish for you to head over to the next one or maybe answer some MCQs. So good job, everyone, and see you on the next one.